Hello.
Yes, we
Is
can see
everyone
that. I
seeing?
can see it.
You can see what I'm doing.
Yeah.
Okay. Um, I don't want to time. So let's go straight to class. We have wasted much time already. So like I told you guys today, we'll be doing a little practical of what we have been learning so far, looking at how the market moves, understanding what the market is really all about, and exploring some basic candlestick patterns. So for this class today, I'm going to be using this coin chart. So I'll be using a crypto. Okay. So this sorry, before I continue, how many of us are total beginners here? Newbies. Any newbies in the house? Any intermediate traders online?
Yes.
We are all new. Is everyone new? Or is there anyone familiar with trading already here in this class right now? Hello. You're not responding.
I can hear you. I can hear you.
Okay, I said, are everyone newbies? Are we all new to trading here, or they are already trading gurus here with me on this live
I'm
session right now?
I'm
That's my question. You are new. Okay,
new
who else
babe.
is new? Winnie is new.
I am
Um,
Who else is
I'm
new?
new to trade. Yeah, I'm also
Daniel,
new.
right? Is that Daniel? Is that Daniel? Okay, let's continue. It seems the network is
Yes,
bad.
I'm new.
So, okay, this app I'm using is Trading View for mobile. And the chart we are looking at now is the Bitcoin US dollar chart. It doesn't matter which chart you are using, you just want to see how the market moves today. So when you open your trading view, this is how it originally displays. So we're going to click on this. You saw what I clicked, right? This icon that looks like a candle bar. And when I click on it again, it switches to like a line chart. So that is where you switch your candle bar and your line chart. Now in trading, we use candlestick pattern to analyze the market, and this is what a normal market looks like. So let me use candlestick. Okay, so we all know the market is all about buying and selling, and as you can see, we can see some movement here from this candlestick. We see green candles, we see red candles. Is that so? Hello.
yeah, that is
Yes,
true.
yes,
That is true.
yes.
that's true.
Okay. So now, for a market deal to occur, someone has to buy and someone has to sell, right? So these green candles that you're seeing, we call them bullish candles, and the red ones that you're seeing, we call them bearish candles. It would be nice if you have a pen and paper somewhere so that you can jot down. So when you see these movements that you see up, down, it means someone is buying at a particular point and someone is selling at a particular point. That is just the simple logic. Now, we use candlesticks to analyze charts because candlesticks gives us an information on how the market is going. So for every candle, you can see multiple candles here. Meaning, there when we scroll, you see there are thousands of candles. It shows you the market data, market history, what has been going on, previous buys, previous sales, and it keeps moving to current position. So just down below here, you can see below the time, you can see something like 1D, 1W, 1M. So that's the time frame for each candle. So we're on 1W now. 1W means 1 week. Okay. Now, what this means when you select 1W and you are looking at this chart, what it simply means is that each of these candlesticks that you see, just one candle signifies a movement of the market for 1 week. Do you understand? So when we go to 1M, now you see the chart looks a little bit compressed. So each candlestick here still tells you that, okay, this is how the market has been moving. This is what the market has moved in a duration of 1 month. Same for 3 months, same for 1 year, and same for 1 day too. Do you understand, guys? Hello?
Can
Hello?
you
Yes.
Yes, yes. When I ask please, someone should, even if not everybody, but one person should at least respond so that I know that you guys are following. That's the essence of me always asking. Do you understand? Are you with me? I want to know that you guys are following. So that if the network disrupts, I will know. If we are not connected, I will know. So bear
Okay.
with me, guys, okay? Uh-huh. So this is a 1 day time frame. Let me zoom in a bit. Now, this last candle that we're seeing, if you look at the right hand side, you're going to see some numbers 90,000, 85,000, 80,75. That is a price margin for the coin, for Bitcoin. Now, the red marking that is showing you 64554.65 is telling you the current price at which people are buying and selling Bitcoin. That is the current price. Then you see a timer right underneath it that is telling you this candlestick is going to end in about 2 hours and 28 minutes. So another candlestick will begin. Then the previous candlestick that you're seeing is for the previous day, the day before, and the day before. Now, this is a 1 day time frame. Uh, let me go to a lower time frame. So let's go to 4 hours. Now, when you go to 4 hours, you see that the candlesticks are kind of bigger. It's because we are now zooming into a smaller time frame. So you can zoom out, you can zoom in. This is just flexible. Now, for every candlestick has a way you decode them. So the ones in red, I said they are called bearish candles. And the one in green, I said they are called what? They're called what? Someone,
Bullish.
anyone, answer me. No, you don't know.
Bullish.
Okay, it's called a bullish candle. Bullish. Bullish, like a bull. So when you hear about bulls in crypto, forex, that means uh, it's a time for progress, uptrend, positive, positive market. That means the market is growing, the market is progressing. But when you hear bearish, like the bear, it's a downtrend. That means the market is falling, the market is losing value. So that is what bull and bear signifies. So if you look at a candle, let me take the one before. Okay, before I continue, when you look at your right hand side, you're going to see the time bar again. It's showing you 64, and you see the time 2 hours 25 minutes. That means it's taking you that much time before this 4 hour candle finishes, and it goes to the next. Let me go to the lower time frame so that I can continue. Okay, let's go to 1 hour. Okay, so you see 1 hour is missing now. When you look at the time, you see 25.39. So it's just telling you that in 25 minutes, this last candle is going to close, and then another candle will open. Another trading session will begin. So let me take the candle before the current one. It's like a small hammer with a long straight line. Now, that long straight line is called a wick. Okay?
It's called a what?
Then a wick. That long straight line is called a wick. Now, the reason why you see that long straight line, if you notice, you won't see it in every candle. It's because the market reached that point and then it pushed back up. So that movement of pushing it back up is what led that wick to form. So whenever I see a
Week,
long
ba?
straight line, yes, wick, WICK. Whenever I see a long straight line, either at the bottom of a candle or at the top of a candle, it's called a wick. Okay? Now, the
All right.
head of that candle, the one that looks like the hammer, is called the body. If you look at the chart, uh, as I scroll, you are going to see some of these candlesticks, they don't even have wicks. Like this one over here. Like this one over here that I'm signaling. You cannot see that, right? Can you all see what I'm doing?
Yes, yes,
Yeah.
yes, yes.
Uh-huh. So this candle that I'm pointing on now, if you notice there is no long line at the edge and just very tiny at the bottom. So this candle has something that we call momentum. I'm touching it from various angles, but I will come to put it up all together so that you guys will understand. So now back to the initial candle I was talking about. The head on top of that wick is called the body. This is the candle that we're discussing on right now. So the head is called a body. The straight line is called the wick. Now, if you look at the color, you see that it is green. And I say green means bullish, right? So why is it green?
Yes.
There's a reason why it's green. There's a reason why it's green. Now, it's like let me say a square and a straight line down. Now, the down, where that straight line, where that wick touches the horizontal line, the border, that is called the open. Okay? It's called the open. Now, why is it called the open? It's called the open because it was at that point that the candle started. Immediately at that point, that was when the candle started, the 1 hour candle. So, hence, the margin, the other line at the top, is called a close.
Which line are you talking
Okay?
about? Sorry, interruption.
The borderline of that candlestick. This candlestick, let me zoom, so that we can all see. Okay. So, this place that I'm bringing my arrow to.
Okay, okay.
Uh, just this is the green line. I'm on the green now, on the green line right now, right? So
Yes.
follow me. Now you see just where I left that my dotted line. where I lapped it on that candle, right?
Yes.
That is, yes, that is the close. Okay.
Okay.
Now, what that means is at this point is where the market, the candlestick closed, the 1 hour candlestick, since we are on a 1 hour time frame. So at this point, it closed. Now, if you look at the next candle, the candle that is ongoing right now, it's at the
Yeah.
same line that it started, right? So immediately a
Mm.
candle closes, another one opens because time is a continuous action. It doesn't stop. So there is no break. Immediately it closes, the next one opens right from that point and trade starts going on. So this is the close, this is the open, and this whole straight line is the wick. This is the body of the candle.
Okay.
From the open to the close is the body of the candle. Do you understand?
Okay.
Yeah.
Now, like I told you guys, there's a reason why it's green. Now, whenever a candle stick closes above its open, it will always be green. That means the
Okay.
buyers were more on that trade during that time. So more coins were bought or more currencies were bought if we are looking at crypto. Do you understand? So once your close is above your
Mm.
open, it means it is a bullish candle. Okay? Now, if you look at the one right before it, the red one, this one right now, you see it's red. Now, for the red, it's a bearish candle, like I said, bearish.
Yeah.
For a bearish candle, the open is above the close. That is why it is red. So if you look at it, the red candle right before this green one, where I'm taking my dotted line to, the previous one before it closed at that point, right?
Yeah.
So the previous one closed there, then this next candle opened immediately over there. So that is the open. Now the close is below the open, just right about here. So for a bearish candle, the close is below the open. And for a bullish candle, the close is above the open. That is what makes it either bullish or bearish. Are we clear on that?
Yes.
Yes.
Any questions so far? Somebody is saying
Not from my
any
side.
questions? Can I continue? No question. Okay. Now for the week, back to this green candle that we were looking at. It only had a long wick under it, right? Now, what that wick
Yeah.
signifies, what it means, because the wick also gives you an information. Now, what the wick means is that the last bottom, the bottom of the wick, where my dotted line is now, it's the lowest point that the market got to. So when this candle started from this place, the open here, it went down to this point. So the sellers were in the market. They were selling, selling, selling. So when it got to this point, the buyers entered the market more aggressively. And because of that aggressiveness, the volume, you can call it volume in trading. So because of that, they were able to push the candle again back up. So it went down first, then they pushed it up. Now that action is what caused this week that you are seeing. Do you understand? So when they pushed it up, they pushed it to an extent that it closed above the open, making it a bullish. So the wick gives you data. The wick tells you how low the lowest point or lowest price, because we are dealing with price here. If you follow my dotted line and you look to the right hand side, you're going to see the price at that point. It's 63,876.42. That's $63,873. So the one up, let's go to this red candle before the green one, since the green candle doesn't have a wick up. So for this red candle, the wick up, the highest point here is telling you that okay, this market was pushed up until that point, then it came down again. Now, what does that mean? For this candlestick, it opened around this point where my dotted line is. Then, in
Mm.
between, as it was trading, the buyers went to the market and they entered the market aggressively. They pushed this candle. It was green. At the time when it was at this point where my dotted line is now, it was green. That candle would be in green color. The reason why the candle would be in green color is because the open is here, and now its current position is here, just above the open, right? And I told you guys, a bullish
Yeah.
candle, in a bullish candle, the close is above the open. So once the body of the candle is above the open, it will always be green, irrespective of this final red candle that you're seeing now. So at the time when it pushed up to this point, it was green. But then what happened? Why the sudden change? Sellers entered the market. That means people started selling Bitcoin. Now they sold, they sold, they sold. It went down. It went down, down up to this point. Uh, I think this is showing up because I did not sign in my account. Sorry. Maybe next class I will sign in my account so that I will prevent all this from happening. Okay. So, like I was saying, it went down. The sellers pushed the market right from this price, went down, down to this point. Now, this is the low. We call it the low. That is the lowest point, the lowest price the candle got to. Then it went back up again. Buyers started buying slowly, slowly, slowly. So it went back up, and by the end of time, the time frame, it closed at this point. So now the close is now below the open, which is why we now have a red candle, a bearish candle. Do we understand that?
Uh,
Do we understand that? Any
yeah,
question?
not everything. Not everything.
Not
Not
everything.
everything.
Okay,
Kind of.
okay. If you have a pen and a pencil, if you have a pen and a book, you can jot this thing down. You can just draw a rectangle, one arrow down arrow. I'm going to send you guys a PDF that you people will read so that it explains this thing more. You use it to refresh your memory. So for a bullish candle, when you draw it, when you draw your rectangle, just write underneath it, you name it bullish. Okay? You put a wick under the rectangle and you put a wick above the rectangle. Now, at the edge of the wick above the rectangle, just like this current one now, at this top point, you name it high. Okay? That's the highest level price got to. Now, at this bottom point here, this place, you name it low. That's the lowest point the price got to. Then the body of the candle, which is that rectangle that you drew, at this place, you name it open. And then at this point here again, the close, you name it close. So from your drawing, you will have high, close, open, then low. That is how a bullish candle is formed. Are we clear on that?
Yes, yes, yes.
Good. Then for the bearish candle, you're going to draw another rectangle. You put a wick, long wick below it, another wick above it. Okay. Now you name that candle bearish. Call it a bearish candle. Now at the highest point, at the peak of it, let me use this one to illustrate. Let me use this candle to illustrate. So at this point, the highest point here of the wick, you call it the high. It's still the high. That is the highest price, the highest price got to during that time frame. Then the lower wick, at the edge of the wick, the lower wick, it is the low. We term it the low. So irrespective of whether you have a bullish candle or a bearish candle, the up part of the wick is the high, the down part is the low. Okay? Then for the body, the rectangle itself now, for the bullish, at the place that we have close, that will be your open. That means at this point here, I'm taking my time to explain this thing so that we get it very well. This is the very basic. So at this point here, that is the open for a bearish candle. For a bullish candle, it is the close, right? For a bearish candle, it is the open. Then at this point here, at this point, this place, it is the close. That's the bottom of your rectangle, is the close. So for your bearish candle, where you have open for your bullish candle is your close for your bearish candle, and where you have close for your bullish candle is your open for your bearish candle. Is that clear? Is that clear, guys? Are you with me?
Yes. Yes, Lucy. I'm with
Okay.
you.
Okay. So that is that for candlestick. That is the basic of candlestick. Now each of these candlesticks have a meaning. It gives you an information. We're not going to really go much into that today. That will be on our next class. So for now, let's look at how market structure works. Now, in our first class, when we discussed market and how market moves, you guys said we all agreed that what happens in the market is that people buy and people sell, right?
Yes.
Yes.
Good. Now, people buy, people sell. People buy in different quantities, people sell in different quantities. Different buyers come at a point in time, different sellers come at a particular point in time. Now, we also mentioned brokers and exchanges in our uh, previous classes. And I mentioned that brokers make their profit from spread. Now, what is that spread that we're talking about? The spread is the difference between the buy price and the sell price. What do I mean by buy price and sell price? Let's say, for example, you have 10 Bitcoin. Daniel has 10 Bitcoin. He wants to sell them off in the market. Now Daniel says, okay, I'm selling my Bitcoin at 10,000 per one, and Winnie wants to buy those Bitcoin, or she's in need of Bitcoin. Now Winnie wants to buy a Bitcoin at let me say 9,950 per one. The difference between that 10,000 and that 9,950, that 15 naira difference is what we call spread. Okay? Now that spread is what these brokers, they charge you as their commission. That is how they make their own money. So in every trade that you are entering, you must also consider spread. Now, when you factor all these spread and commissions, is when you are choosing your broker or the exchange you want to use to trade. Because every exchange, every broker, they have their own different prices. It's like different businesses selling at their own prices. So you understand. So spread matters in your trade, because when you win a trade, you're going to be charged. When you lose a trade, you're going to be charged. It doesn't matter to these guys. They make a profit either if traders win or if traders lose. So this market moves in a certain direction. It goes up and down until infinity, until the end of time, or until the market crashes. And market is like, let me say, an economic cycle is full of bust and boom. Now, when I say bust and boom, bust means downfall, boom means rise. Okay, so if we scroll through this previous chart, we are going to see a rise and fall in prices, a rise and fall in prices. It continues, a rise and fall in prices. Are you seeing that? So this is okay. From here, let me start from here. This is the fall. This is the rise. This is the fall. This is the rise. This is the fall. This is the rise. This is the falling of the market.
Okay.
The market movement, yes. So when I say fall, I mean the market is going down. When I say rise, the market is going up. Okay.
Okay, sir.
We call it uptrend and downtrend. So the market moves in trend. Trend is another thing we are going to look at in all of our classes to come. So, but you should know that the market moves in trend. Now we have three types of trend. We have an uptrend. Okay, an uptrend is when the market is going up. We have a downtrend. A downtrend is when the market is going down. Then the last one, the market is neither going up nor going down. We call it a ranging market. Ranging market. So that means market is neither going up nor going down. The buyers and sellers, they are struggling. They are struggling to move the market. It's like 50-50. They are dragging like a tug of war. Do you understand? Now, after every range period, after every ranging period, you're going to see a sharp movement either to the upside or to the downside, because one person is definitely going to overpower one. It's just like a tug of war. No matter how strong the two parties are, after dragging, one side is eventually going to overpower the other side, and the other side will lose. They will fall to the ground. Okay, so that's just what's going on in the market. The buying and the selling causing this movement. So from here, now this is the downtrend. You see red, you see more of red. That is how you recognize the downtrend. When you see more red candles, you know, okay, it is a downtrend. When you see more green candles going up, you know, okay, this is an uptrend. Okay. Now, a uptrend consists of higher highs and higher lows. if you listen carefully, I said higher highs and higher lows. That means when you have a first high, the next high is going to be higher than the previous high. And when you have a low, the next low is going to be higher than the previous low. You're not going down, you're going up, progressively up. That is the uptrend. Just like this place, when you look at this place from this starting point now, let's say this is our starting point. Now we have a movement down to this place. Can you all see what I'm doing with my arrow, with my dotted line?
Yes. Yes.
Okay. So
Yes,
now
yes.
this is going up, right? It's going up. It's going up. Now this is at this point it starts going down, right? At this point it starts going down. So this point here is our higher high, or let's say our first high. Now when it goes down a bit to this point, it stops here, then it starts progressively going up again. You start seeing more bullish candles going up, more green candles. So this is our higher high, and this place is our low, our first low, right? Now
Yes.
it continues going up again. Now this is high, second higher high. So this is the first high. Now this is the higher high. You can see that this high here is higher than this one, right? Then the market moves sideways a little bit, right? Now this sideways movement is what we call a ranging market. If you notice, there's not really much movement here. The space between the up and down is limited. It's very small, unlike this place. Unlike this place here, this place there's a large difference. There's a large movement going on here. But at this point, from this candle here down to this candle here, you are just seeing a very small movement in direction, small change, small change. So we call it a ranging market. So this is ranging here, and at this place too, it's kind of ranging too. Okay, so from here, higher high. Now it went down a bit to stop around this place, just right where I'm keeping my horizontal dotted line, the horizontal dotted line. Now this is our higher low. Okay, because at this point here is a low, but it is higher than this low right here. Do you understand?
Yes.
So now from this low it ranges. Let's forget about this ranging for now, but it ranges. Now after ranging, it moves down to this place. This is our third higher high. Don't know, whenever I touch it, this happens. So this is our third higher high, right about here. Okay, now from this place you went low again to this point, right?
Yes.
uh, so this point, this is our higher low. This low is higher than this low, and this low is higher than this low. Let me see if I can mark this out. I'm coming. Let me see. Sorry, hold on guys, just a minute. Before our next class, I will definitely sign in. I just wanted you guys to see how the interface is without being signed in, so that when you set up your own, you get the hang of it. Let me see. Trend. I hope I can draw. Okay. I don't know why I can't move this. I'm coming. Let me just do this manually. Because I don't on that one. Okay. Let me make a clone. I think I'll use the laptop for our next class so that
Okay.
it will simplify all these things that I'm doing. Okay, you guys can see the markings, right? 1,
Yes.
2, 3. Now this is our first low, this is the higher low, and this is the third higher low. So this movement is an uptrend. Now for the higher highs, let me mark the higher high. I'm going to change the color to orange. Okay. Sorry about this, guys. So can you see the way it is now? So the orange is the higher high, first higher high, which is this. This is our first high. Now this is the second higher high, and this is the third higher high, right? So for every higher high, we must have a higher low because the market must come down at a point. So higher first high, first low, right? Higher high,
Yes.
higher low, higher high, higher low. Are you seeing that? So
Yes.
that shows you that okay, this is an uptrend pattern. The market is going up. Then for a bearish market, for a downtrend, okay, let's take this. Drawing these things is going to be just again. But what can I do? So I'm going to take these points first. Let me color the pink. Okay. Making another color. Just blocking my view. Let me do one more. Okay. So we can see the pattern, right? We cannot see the
Yes.
movement. Yes. So let me mark the lower lows now. These are the lower highs. I'm going to change the color to what should I change it to? Let me see how. Okay. Yes, let's use white. Okay. Okay. So this is what a downtrend looks like. So this is our starting point. I'm tired of this already. So this is our starting point. Let's call this our starting point, right? So we have our high here. Is that not so? We have our high
Yes.
here and we have our low here. So red candle down, it stops here. Now from this place, buyers get into the market. They buy. It goes up, it stops here. Now notice that it doesn't go above this. It stops here below it, making this a lower low, a lower high. This is the first high. This is a lower high. This is our first low. So from a lower high, sellers enter the market again, and we have a lower low. This low is lower than this low. That's how you know a lower low. It has to be lower. Now, from this place again, we go up a bit. I didn't take this into consideration. We come down a bit. We go up again to this place. This is our third lower low.
Can you just rephrase a
Hello,
bit?
is
My
someone
network
saying something?
just rephrase a bit. My network just went out just for 2 minutes or so.
Sorry, I'm not hearing you. I didn't hear you.
I mean, just explain the lower low and lower high a bit again. My network went out a bit. Do you hear me? Okay, I can't hear you. It's like hello? I can hear you, but your voice is kind of down. Uh your voice is kind of down. Switch off your speaker and speak and switch it on again, please. I will mind. Or let me go out and join again. I can hear you, but your voice is down. Yes, still down, still down. Eh? Let me try and make use of earpod and see if it clears it.
everyone hear me? Hello. Mind is everybody speaking? Ah.
Sorry for this.
Hello, you also
I'm coming. Hello? I can hear you now.
okay, you can hear me now. So your airport is working, right?
Hmm?
If you have an
Yeah, it's
airport or
working.
plug one, so that you can get it out and clear. So can I continue?
Uh, Continue. Let's see if it will be okay.
Everyone,
I, I think.
can I continue?
Can you rejoin? Like, can you restart the call?
That
Hmm? I don't know if every other person are still active, like for the call. Maybe you can restart the call, then we'll join back again.
okay, if everyone has let them respond. That's what you want.
Eh?
How do you guys want to
I can't even hear you again. Your voice is very bad.
can't even get me.
Can you hear me?
Yeah,
Someone is
you are
saying
back
she
now.
can hear me loud and clear. So I believe it may be your network. Can you all hear me?
I can hear you very loud and clear now. You are back
Okay,
now.
you can hear me very well, loud and clear now. Okay, I believe
Yeah.
everybody else can hear me loud and clear too.
Yes.
So let's go back. Let's go back to it's
Okay,
past
thank you.
11 already. So let me quickly round up to this class so that we can all have our rest.
All right.
So I just finished explaining how an uptrend moves, right? Higher high, higher
Yes.
lows, higher high, higher lows. Is there any question on that part?
Yes. No.
No question. You are the only one responding. I think you are the only one that is with me here. The rest are sleeping. So no question on uptrend. Now for the downtrend, these are the markings that I did. And I said this is our starting point, right? Let's take this as our starting point. Now, this is our first low, our first high, sorry. Now, from this place, the market moves down to give us our first low, which is here.
Yes.
Then
Excuse me,
the
sorry.
market goes up again and stops right about here to give us a lower high. Now, it's a lower high because when the market was going back up, somebody's saying she can't see my screen. Oh my God. Who else can't see my screen?
Yeah. Me too, me too.
You too?
Yeah. Your screen is not showing.
Let me fix that. Let me fix.
Okay.
Can you all see my screen now?
Yes.
Okay, everybody's seeing my screen. That is good. Uh, Henry, right? Your name is Henry.
Yes. Yes.
Okay, good. Let's continue. So, like I was saying earlier, this is our starting point. So let's take this as our first high, right? So the market goes
Yes.
down and stops right about here, creating our first
Yes.
low, right?
Okay.
So from this place, it pulls back up, buyers come into the market, and it gets to this point. It stops moving any higher, which gives us our lower high. Now, it's a lower high because this place is below this place, right? So if this is our first high, this is a lower high. Since the market stopped here, it didn't exceed this point. So this is our lower high. Now, from the lower high, sellers get into the action again and pushes the market down to this point. Now, when you notice, it goes below this low, the first low. So going below it, it
Yes.
creates a lower low. Okay, lower because it's
Okay.
lower than this. So this is our lower low. Now, from this point again, it goes up, comes down, goes up, and I mark this place as another lower high. Okay, so this is our first high, a lower high, and another lower high. Okay, now the market gets to this place, then sellers put in more pressure, prices starts going down, 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 goes below this low and gets to this point, which is another lower low. Okay, it
Yes.
repeats the same pattern here, lower high, lower low. Okay, so in a downtrend, you are going to see a series of these consistently, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, just in that pattern. That is how you know the downtrend. Is that clear? Are we clear on the downtrend?
Yes, sir.
Okay. So now if you notice, just after this lower low, the market goes, it breaks. Now it breaks. What I mean by it breaks is that it passes this our last lower high. Okay. There's an implication here, but I'm not going to go into that tonight. Maybe in our more frequent classes, we'll get to understand that. I will explain it. But for this class, let's just understand uptrend, downtrend, and range. So I've showed you guys ranging market. Let me show you guys another ranging market. Okay. If you look at this point, this area here, this area that I'm moving around, can you see it? It looks like there's a
Yes,
creation
sir.
of higher high, higher low, something like that, right?
Yes. Yes.
But what's actually happening here is range. So the market is ranging, even though it looks like it's creating higher high and higher low. It's actually ranging because the gap between this point and this point is not really much. You can't compare it. You can't compare it to the gap between this point and this point, or this point and this point. Are you seeing the difference? Or this point
Yes.
and this point. There's a wide gap, but here now, at this point, we are just seeing a little movement. And if you remember earlier on, I told you after a ranging market, the trend is going to, the market is going to move in one direction with volume, because
Okay.
either the buyers will overpower the sellers or the sellers will overpower the buyers, right? So now
Yes.
at this place, after this dragging here, right about this point here, okay, from this place, from this high point here, you're going to see a lower low, right? This is a lower
Yes.
high. Can you see that? Where I'm putting my horizontal dotted line. This is a lower high. This
Yes.
is a high. This is a lower high, right?
Mm.
This is a low at
Yes.
this point here, and this is a lower low. Now, this is another lower high. Then from this lower high, you just see a zoom movement, right? Very
Yeah.
large drop, like lots of sellers just enter this market and push this price way down. Now we call this momentum in trading. When you are observing candlesticks, you also need to consider momentum. Now momentum is the force that moves the candle. Okay, when you see a large or high momentum candlestick, you know that yes, there is a lot of volume. That means a large sum of transaction is actually going on in that place. That is what momentum is all about. Telling you that yes, a large sum. And whenever you see large momentum, you are going to hardly see any wick. That is why this candle here does not have any wick. That is why this candle here does not have any wick. If you look at this place, this green candle, this one has a small wick, this one does not have any wick, this one has a small wick. So this candle stick here has a high momentum, okay, has a high volume, lots of transaction, even though it's not as much as this, but that's the message. That is what it's telling you, that there's volume in this place. Okay, a lot of transaction went on in this place. So you also consider momentum, and where there is less momentum, you find wicks. You are going to see a lot of wick there, and you're going to see slow movement around that region. Okay,
Okay.
so are you with me? Is everyone with me?
Yes, sir.
Any questions? Any questions? Any questions so far? Hello? Any questions so far? Nobody is
No.
answering. Okay, no, it seems it's just me and you that is left here. So you can see this market. If you look at this place, I just zoomed in, but obviously, even without marking it, you can see that from this place down to this place, you're going to see it's a downtrend, right? Lower highs, lower low, lower high, lower low. So this is how the market moves. Now let's go to the end of this chart. Okay, this is the candle we analyzed. We started our analysis on this candle.
Yes.
This was the candle. Let me zoom in a bit. This was the candle that was moving when we started our class, right? If you remember. So
Yes. Yes. Yes.
we have been in session for more than an hour now, and when we
Yes.
started this session, it was about 25 minutes for this candle to close, right? So this candle closed,
Yes.
and another candle started. So this candle is ending in about 32 minutes. So let's go to, I want you guys to watch something. Let's go to 30 minutes. So you see, this is a 30 minutes time frame. So each candlestick represents 30 minutes movement. You can see that this is going to end in about 2 minutes. So if you look at your time now, you see this is 11:28. We are really up late. So in 2 minutes
Yes.
time, this is going to end. Another candlestick, 30 minutes candle run is going to start. Let's go to 1 minute. Yes, let's go to 1 minute so that we'll watch this live. This 1 minute. So if you see the timer, you are seeing 37 seconds, 36, 35. Can you see that? 34, right?
Yes.
I'm still
Yes.
zooming so
Yes.
that you
That's
can
one.
see clearly. Now, 27. So it's counting down. This is, I just want you guys to see. So you
Yes.
can see a lot of wicks here, right? You can see a lot of wicks over here.
Yes.
That means price got down to this level. Buyers came in to push. Sellers, buyers are fighting. Buyers are pushing. So buyers want to dominate the market, but it didn't work out for them. The sellers had the final say. Okay, look at our candle. It just ended 56. This one just started. Can you see that?
Yes, yes. Coming, going.
So that's how candlestick works. Depending on the time frame that you are in.
Okay.
This is a 1 minute time frame. So you see, it's 37 seconds left. Did you see what just happened? That candle was green. Now it's turned red.
Yes, yes.
Hmm?
Yes,
Are you
yes.
seeing that? Are you
The
watching that
sellers are
movement?
dominating.
And it's
Yes,
increasing
yes.
now. It's moving. It's moving exactly. So it was green. When it was green,
Yes.
just like I told you at the starting of the class, the price is above the open. But now the price is going down. So the price is below the open, and automatically the candle changes to red. 7 seconds. 6,
So
5,
that
4, 3, 2, 1, 0. Another candle is going to start. Do you see that right there?
yes, yes.
So this is how candlestick works. So 1 minute, you are going to see every 1 minute a new candle is going to start. You can choose seconds, but we don't use seconds to analyze. 5 minutes, if I take this to 5 minutes, this candle signifies what happens every 5 minutes. So if I go down to my 1 minute time frame,
So one
it's
hour.
ending in 24. Okay, no, this is one minute. Okay,
1 minute.
now
Yes,
let me go
yes.
to my 5 minutes. This is 4:11, right? That means this
Yes,
candlestick just started about a minute ago. Is that not so?
yes, yes.
So this candle right before this candle that just started about a minute ago.
Mm. Hello. Hello, sir. Hello.
Hello guys, sorry, my network tripped. I'm back. Hello, hello Danny. Okay, anyone here? Let's round up. Anyone still here? Let's round up. Okay. Can you hear me, Melissa? Melissa, can you hear me? Say something if you can hear me. Okay, okay, perfect. Since you can hear me, let me share my screen so that we can finish up the class. You can see my screen here. You can see my screen. Okay, okay. You can see my screen. Okay. Uh, let's round up today's class. We've taken a lot of time already. So with just one last key note, I'll wrap up today's class. I was saying something before my network got disconnected. So let me conclude that. Okay. So I was making a point, and the point I was making, there is something that we call top-down analysis in trading. It's too much of a term for you guys to go into right now, but it's been part of what we have been doing in this class today. So let me just give you guys a heads up on it. If you earlier on, we started with 1 day, then we went down to 4 hours, 1 hour, 30 minutes, down up to 1 minute. Okay, so that's what top-down analysis is all about. Now, I was saying something earlier, 5 minutes time frame. This is our 5 minutes time frame. Okay, this 5 minutes time frame, this is our current 5 minutes, which is about to end in 3 minutes time and 30 seconds. That means we have taken 1 minute, a minute and 30 seconds from here. Now, this is the previous 5 minutes. So when we go to a lower time frame now, this is a 5 minutes time frame. You're seeing the action in the market here, 5 minutes. Now, when we go to a lower time frame, let's say 1 minute. 1 minute 5 times is going to give you 5. So this one is ending right about now. So in our 5 minutes time frame, we should have about 2 minutes to go. You can see that 2 minutes to go. Okay, now you see the wick is forming here. Now the wick is forming here because like I told you guys, price went down, then buyers push it up to create that wick. Now when we go to our 1 minute time frame, which is a lower time frame, 1 minute 5 times will give you 5 minutes. Now this is what pushed that wick that you are seeing in the 5 minutes time frame. So a lower time frame will give you a breakdown of what is happening on a higher time frame. So 1 minute, 2 minutes, 3 minutes time frame is going to give you a breakdown of what's happening in 5 minutes time frame. 5 minutes time frame is going to give you a breakdown of what's happening in 15 minutes time frame. 15 minutes time frame is going to give you a breakdown of what's happening in 1 hour's time frame. So that week that you saw in the 5 minutes time frame, this week, yeah, the week that was here on this candlestick, it has disappeared now. If you look at it, it has disappeared, right? But we saw the week earlier on. Now, this is the cause and effect of it. So this is the last 5 minutes. 1, 2, 3, 4, 5. So the candle started here. It went down to this point, which is the low and the close. Then the green candle started right immediately and went up almost to the open of this red candle. So this green candle here was buyers coming in to buy at the market, which made that wick to form. But right after the buyers bought, sellers came in again to cover that gap. If you look at the three candles here, you're going to see that they are almost the same length. So sellers coming in to cover that gap was what made that wick to disappear. So if we go back to, this is the close, right? And you see this is the last time 1 minute, which ended just slightly above here. So if we go back to the 5 minutes time frame, see how it looks. Okay, we're still on. This is the last 13 seconds, right? Let it close. Let it close. 8, 7, 6, 4, 3, 2, 1. So it closed, and another 5 minutes just started. So when we go back to our 1 minute, let's go back to 1 minute. I want you guys to really see what is happening. So when we go back to 1 minute, now this is the starting point of the new 5 minutes candle that started. Now this is the close, the last minute in the previous 5 minutes. So 5, 4, 3, 2, 1. These 5 candles consist of one 5 minutes time frame. 5, 4, 3, 2, 1. This last 5 candles consist of the previous 5 minutes. So we call this top-down analysis, right? That means using lower time frames to see what's actually going on a higher time frame. It's part of reading the markets, and it's crucial, it's necessary, and it's something that you guys have to know. But with time, you get to know it. So for today, for a short recap, we discussed market action, how market moves. We looked at candlesticks. We explained the parts, the close, the open, the high, low, and we also looked at uptrend market trends, uptrend, downtrend, and ranging markets. Those are the 3 types of market trends that we have. So I know most people are not active now, but those that are active, do you have any questions? If you have any questions, I will take them now. Any questions? No questions? Okay, let me go back.
From my side.
Any question
No.
on what we have learned so far? Okay, no question. It's all right. So in the absence of no question, we call it a day. And before I close, I would like to apologize. Today's class was kind of rough, partly because I actually came in late. I didn't get time to settle down and put a lot of things in place. But next class, we're going to do away with all these negligence, noises, and irregularities that came up during today. So we're going to have a better class in our next live session. So in our next live sections, we'll be going deeper into candlesticks and explaining what each candlestick stands for. In fact, these candlesticks have names. I know you may not be aware, but each candlestick, there are some candlestick patterns. They are named because they have a high key information, high influence on price action. So when you see a candle pattern, a particular candlestick pattern being formed, you know that, okay, there's something deep, something strong that is about to happen around this place. So that was what we're going to be looking at in our next class. So in the absence of no questions, let's call it a day so that we can all take our rest. I recorded this video, so I will drop the recorded version so that you guys can go through it again, revisit, relearn. In case you forget something, you grab it up again. So I think that will be all for tonight. Good night. Thank you for participating. Thank you for being active. Henry, right?
Yeah.
You are the most active. Now, are you the one that sent your number last on the WhatsApp group?
No.
Okay, you are not. All right, Melissa, you guys, thank you. Thank you for being here. Thank you for staying to the end. And see you guys in our next class. I really love the energy. So you guys should keep it up. And with time, you
All
people will
right.
be making a lot of money in trading. Hmm?
All right. Thank you.
It takes
Thank you
hard
for your
work
time
and
also.
consistency, but we'll get there.
Okay.
All right. Have a good night. Have a good night, everyone.